Hey guys, my name's Ravi Sharma and I am the founder and buyer's agent here at Search Property. Thank you so much for joining me on yet another episode of Search Property TV. If you haven't already, please smash that subscribe button, hit the bell icon so you're notified when I drop a video. And of course, if you like this content, smash the thumbs up button and leave a comment down below. Now today's video is following on from the Property Wrap show, which I introduced a few weeks ago. And based on how many comments and feedback I'm getting so far, you guys are loving it, so I'm going to continue running with this. Now, what we do on this show is basically break down some news articles as well as go through some data around the economy of Australia and how exactly these journalists that are claiming to make clickbait articles and how they actually come into effect and what the real facts and figures actually look like. So if that's content you're interested in, please keep watching. Now today's video is an interesting one because most people think that saving their money is getting them further ahead in life, which in fact is not the case. And traditionally what we were taught around save our money and we will be rich doesn't work anymore. So I've actually made a video around why savers are losers. If you take offense to it, it's intended for you to take offense to it because I want to be igniting you to take proactive approach towards your financial independence and of course, generate some passive income. So this is 7 banks that are looking at cutting their rates or they've already cut it ahead of an RBA cash rate cut. So let's dive in. So this came out a couple of days ago and it says 7 banks are now moved to cut savings rates amid speculation that the Reserve Bank will cut rates even lower. This is interesting because I've been talking about this for months on this channel that the RBA will continue to cut rates. Philip Lowe came out and said, no, 0.25% is the lowest we're going to get. We're not dropping it any further. And wait, what happened? Well, they've just announced that they may cut again. Banks are coming out and saying, yes, they are definitely coming in, and now we are pricing accordingly. So we've already seen from a mortgage perspective, we've already seen CBA, ING, among other banks that have already cut their mortgage rates already. So what are we seeing here? We're seeing that the RBA lies to us. Of course, this is something that I've been talking about on this channel, is that don't just read into these media headlines. Don't even read into what these guys are specifically saying in their notes or in their meetings that they come out and actively propose that this is what's happening. They're lying to us. And this is what I need you to wake up to, is that not everything they say is exactly what's going to happen. So what we know is that they were heading towards 0 as a cash rate. Then they came out and said, no, we're not going any lower than 0.25%. I am saying this for months now, and I'm saying it yet again. We will hit negative interest rates in Australia. Now, I'm probably going to cop a lot of hate in my comments down below. However, the fact is the fact. And unfortunately for those who decide that making excuses and hoping that the market will crash is how they want to go about life, well, then that's up to them, right? I'm not here to convince anyone of doing anything. I'm here merely sharing my opinion, and hence why none of this is financial advice. So if you do seek that financial advice, you can contact us. We can definitely point you in the right direction, or you can seek that for yourself. Let's get back into it. NAB has been the latest to slash rates following ING, the Bank of Queensland, Credit Union SA, Beyond Bank, Bank First, and Arab Bank Australia. It brings savings rates to some of the lowest levels Australians have ever seen. When it comes to savings rates, prices are down. Today, NAB sliced 0.1% from savers rates, joining 6 others that have made similar moves in the last week. Canstar Financial Services executive Steve Mickelbecker said. Mickelbecker. Term deposits provide no respite, also cut by between 0.05% and 0.15%. Aussies will have to be proactive in chasing higher rates, he added. I wonder what they mean by proactive. Savings have to micromanage their money by qualifying for bonus rates or switching savings accounts every few months to earn introductory rates or settle for rates around 0.05%. Guys, that's not active management. That is not being proactive. Micromanaging your money to suddenly make 0.01% extra in your savings account is just dumb. The amount of time you're going to spend doing that, you may as well put in a loan application and actually go through and buy producing income assets what I've been talking about on this channel. But I'm not here providing financial advice. I'm here merely providing some entertainment for you guys, because there are some people out there that are actually doing this. And fortunately for them, they're not hearing the white noise. They're actually securing real estate in good locations that's going to provide them financial freedom in 20 to 30 years' time. Just saying. Active management is now a savings necessity, and rates don't seem likely to perk back up for a very long time, he added. Well, okay, let's just take a moment here. The RBA cash rate is what dictates what the interest rate will be in terms of your savings rates, but also for your mortgage rates. Now, we're heading towards a position where some banks are offering 3, even 5-year loans fixed for like 2.5%. Okay, so if the bank knows that we're going to increase the interest rates in the near future, or the RBA will increase cash rates in the next 5 years, why would the bank go and put their hand up and say, let's fix the rates for 2.5%? They know that based on where the economy is, we can really not predict or expect a cash increase or cash rate increase to occur. So what's going to happen to savings rates? Well, they're going to continue falling as the cash rate keeps dropping. Now, if we're in negative interest territory, are we going to have a point where we literally get to you saving your money costs you money to keep in the bank? Let me just say that again. Instead of earning 0.01%, you have to pay 0.01% just on saving your money. They're giving you the keys to what you have to do, yet 99% of people still won't do it. Banks are under less pressure to raise funds from savers, and we have seen savings interest rates continue to slide through the pandemic, perhaps an unanticipated consequence of the measure to fund business through the crisis. So here we have top 5 savings accounts. We have Rabobank, Heritage, Bank of China, My State Bank, and UBank. Okay, so the highest you could get with some promo rates is 2%. Is that for real? 2%? Wow. So if inflation was 2% and you earned 2%, that'd be 0. This is what you were saying is financial freedom, or you using your money smartly. Okay, cool. Where can I find a good deal? Just because savings rates are low across the board doesn't mean there is nothing you to do about it. 2 months ago, Westpac introduced a savings interest rate of 3% for Aussies between 18 and 29 years old. Wonder why it's just targeted at young people. To be eligible for the Westpac Life rate, young savers that have to ensure their balance grows every month and they make 5 or more transactions on a linked transaction account. But if you're not eligible for the savings account, CanStar has whittled down the best deals you can find on the market right now. Wow. Guys, it's right here. I'm going to explain where is the best deals you're going to find. Aside from Westpac's 3% for 18 to 29-year-olds, the top savings interest rate among the big 4 banks is a skinny 0.9%. Australians have to cast the net wider than the brands. They always know if they are going to find rates up to 2%. With most accounts available online these days, the legwork can be done in front of your screen. Okay, wow. Okay. The highest you can earn, if you're young, if you're under 29, you can earn 3% from Westpac. Now, 3% is actually not that bad. I keep shitting on these savings rates, but that's actually not that bad. 3% is great. However, you've got to also jump through numerous hurdles to get there. And if you turn 30, sorry, you aren't eligible anymore. So what are the other options? Guys, being a Australian real estate channel, of course I'm going to talk about real estate, but let's just think about this. If I invest $25,000 into buying an asset that costs me nothing to hold because the rent I receive is more than my mortgage repayments and holding costs, so let's say that breaks even, right? It means that if I now have positive cash flow or there's capital growth, okay, on the $250,000 property I buy, well, I could end up making the 10% growth, being $25,000, which is what I put in, grow in the next 2-3 years. So that is $25,000 made from $25,000. Let me just explain that again. I put in $25,000 to buy a property worth $250,000. The cash flow, we're saying, is going to break even, right? And if it grows by 10% over the next 3 to 4 years, which, is a very conservative approach to this, it means in 4 years, I will have increased my wealth from $25,000 to $50,000, and that would be 100% return on investment. That's what is possible on the most simplest deal, right? A deal where you're literally getting the bank to give you 90% of the loan, where you put in $25,000 to get into a deal like this, and you've doubled your money based on some mediocre capital gain growth, and we're not even considering cash flow, versus you can earn a nice 3% at the bank. Guys, I'm not here to shit on savers. I'm just here to share my thoughts on why I think there are better opportunities out there. You need to be proactive, not just be proactive, try and find the best deal for 4 months and I get this promotional rate of an extra 1%, which, by the way, on $100,000, let's say you've saved $100,000, you earn 1% on that, that's $1,000. Let's just let that sink in. $1,000 from the $100K you've got sitting there. What is the point? What is the point of having that money sit there and do nothing but earn you $1,000? That's on 1%. And guys, I think where we're headed is a negative cash rate territory. And I believe that will come into effect in probably the second quarter of next year, I believe. And I've got some videos here. They've all been linked up here. You can go through the channel. Again, if you haven't already, subscribe. Because if you want to know about this stuff and you find my videos entertaining, well, hit the subscribe button, smash the bell icon, and get educated. Become proactive. I'm receiving more calls than ever before. So if you're thinking, oh, well, I'm scared. Many other people are scared. No one's actually buying anything. I can tell you now, there are people that are cashed up that are actually actively calling me, and within the matter of days, sending through agency agreements to go, here's my deposit, I am ready to go, let's get finance approved. So if there are people like that out there, and I've been talking about it on my Instagram page, if you don't follow, you need to get on top of, because I'm sharing content on there every single day, 3 to 4 times a day on my stories. And we're basically in a position where people are buying properties that are listed, have been sold with an offer accepted within a matter of days. This is what is happening out there. And if you are unaware and you've got tunnel vision for your backyard, the truth is the opportunities are out there. It's just a matter of figuring out whether you are ready to take it on board and whether you can align yourself with someone and leverage their confidence, leverage their expertise and knowledge in the space so that you don't make those mistakes. I'm here to try and help, educate, because no one is talking about Australian real estate in this context and in this much depth, trying to explain it to people. So I really do appreciate everyone that watches and supports this channel. So again, if you haven't already, please smash that subscribe button and let me know what you think of these savings rates. Do you think we're actually going to see negative rates in Australia? Let me know in the comments down below, and I'll catch you guys in the next video. Thanks, guys.